SoFi stock just reporting earnings, which ends the quarter of June 30th, 2026. Now, keep in mind, this video was made with AI. So as you can see here, I am an executive investor presentation, which is totally not true. So let's get into the numbers. Now, here is the total revenues and EPS by SoFi. They did beat on revenue by 40% year over year, which is absolutely crazy. And that was a total of $1.20 billion, and diluted EPS, which was also a beat of 0.12 compared to analyst expectations of 0.11. Now, like I mentioned before, keep in mind that this is for the actual second quarter of 2026. These are the most recent earnings posted today before market open on July 29th. So let's go ahead and break down that revenue by segment. So how does SoFi make their money? It's pretty much divided into three different segments. As you can see, financial services, which is their money, invest, and relay technology. And you might be asking yourselves, what is this? So just like the presentation, let's go ask ChatGPT. This pretty much handles all their digital banking side, their wealth building, and their financial tracking. So SoFi Money, it provides high yield online checking and savings with no account fee. So like any other bank that offers a high yield savings account, this is pretty much what that is. The SoFi Invest, which is a trading platform, I guess you could compare it to something maybe like Robinhood or M1 Finance. It is not the exact same, but it's what they're trying to accomplish. And then there's SoFi Relay, which is something that links internal and external accounts in one dashboard. This way you can track your total net worth, how much total money are you losing, how much total money are you making, and also financial insight. This tracks your monthly spending, your payout progress, your credit score, etc., etc. That is 55% of their total income. 32% of their income is going to be the lending segment, which is personal, student, and home loans. Now, this is going to be personal loans, student loans, home loans. And how are they making money from this? Well, my assumptions, and we're going to see it now, is by interest. So they do charge interest on the money that they're lending out, and that's how they're making income. And then the third part of the revenue, which is only account for 13%, about 156 million, is a technology platform, Galileo and Technisys. I'm sorry if I'm butchering that name. And pretty much what that is two enterprise technology companies. So pretty much B2B infrastructure that SoFi is trying to make it look like the AWS of fintech. If you don't know what AWS, it is the software or the SaaS, which is enterprise software of Amazon. Now, Galileo specifically is a payment processor and a card issuing engine. So this allows the company to automatically issue physical or virtual cards, debit cards, credit cards, and prepaid cards. It does payment processing, so ACH routing, transfers, and all that good stuff. And it also has fraud security, so that nobody's trying to steal your info. And like we said, Technisys, I believe that's how you pronounce it, is pretty much what they're trying to do as an AWS. Now, this is the recurring and fee-based revenue streams. This is very important to me because SoFi is sort of like a bank, even though they're considered to be a fintech, which I think is the same thing. Again, guys, I'm just a beginner. I'm trying to learn this little by little like you guys, and I'm trying to learn investing, so I'm just recording my journey, okay? Let me know in the comments below how I'm doing, because I do need to learn a lot more. As we saw before, the net interest income is 38%. Their non-interest income, so pretty much not their loan part of the business, it's about 44.6%. And then the technology platform, so what we just saw with Galileo and Technisys, is 16.7%, which is still pretty good. I mean, this is recurring fees. Now, something that is very important, but for this type of company, is the total number of members. For the Q2 2026, they have 15.8 million members, which is an increase year over year of 35%. This did beat analyst expectations. This company is growing double digits, guys. This is a $20 stock, not even, it's like $16, $17 right now, growing this fast. I'm not sure why the stock price is like this. I'm not sure why people don't like this stock. Not recommending it, not saying to go buy it, but I definitely do have it in my portfolio. Just full disclosure. Their financial products was an increase of 24.4 million, which is an increase of 42% year over year. Their total deposits, so this means that people, you could have 15 million members, but are they depositing money? And the truth is that they are 45.5 billion, which is 5.3 billion more in quarter 2 of 2026. As you can see, consensual status exceptional according to Gemini, which is the AI that I'm using for this video. Not sponsored. Gemini, reach out to me, please. Loan orientation volume 14.8 billion, all-time record. They did a beat on this. That's a check mark on there as well. Performance and asset quality. So how good or how likely are these loans that they're giving out going to be paid by the customers that are using it? They have their delinquency rate for personal loans 90 plus days at a 0.42%, which is well below the industry average of 1.15%. So they're half double of what the delinquency rate is for other banks. Now, very important, their average FICO rating is above 745 credit score. That means whoever that they're having, whether it's students, homeowners, first-time homeowners, personal loans, they have a FICO score of 745 and above. Why is this good? Well, technically, quote unquote, the higher your FICO score, the more likely you are to pay your debts, your loans, and not miss on payments or be late on payment, which is very good for this type of sector of the company. The more loans that they have, the more risk that they take, and then they can maintain this at a low rate, at a low percentage, while maintaining this quality of a customer. It is very likely that the loans will get paid, meaning that they will make more money in their interest income, meaning that the stock will continue to grow. Now, the company's guidance, they raised it from 4.75 billion to 4.85 billion. Why is this good? Well, they thought in Q1 of 2026 that they were going to make less money than they actually did, and so they increased their guidance, meaning that they expect to make even more money. And then this word here, I'm really not too sure how to pronounce it. I think it's EBITDA. I hear it all the time, but it's like the word collateral. I spent 10 years trying to learn how to pronounce that word. If you can let me know in the comments below, break it down for me step by step how to pronounce this. But they increase it from 1.35 billion to 1.40 billion. Operating margin exceeding 28%. Now, after seeing all of that, let's go ahead and take a look at an intrinsic value of this company. Keep in mind, this is considered to be a growth stock. And as we can see on a base case scenario for their intrinsic value, they are still undervalued by 9%, meaning the stock could be worth about $18.48. On a bull case scenario, the stock is undervalued at 16%, meaning that this stock could be worth $19.96. On a bear case scenario, it is still undervalued by about 3%, meaning the stock could be worth about $17.19. I am in no means, shape, or form telling you to buy the stock. I'm just showing you the numbers. And if you like to be very safe with your investments, you should always consider buying a stock below the intrinsic value, whether it's 10, 20% margin of safety. That means that if you think the stock can go to 18 and you want to buy this 10 or 20% less than this than the real value of the stock, you could potentially be buying this stock at around $14.78, which is not too far off from the current price of $16.74. Now, do keep in mind that this is a company that once was trading at about $30 and is currently at 16.74. To me, this is an opportunity, especially with the numbers that we just saw. So let me know in the comments below, what do you think of SoFi? And with that, we reached the end of the video. Again, this was made by ChatGPT, so as you can see, you have your Q&A at the end of the presentation. I'm trying to make this look pretty cool. Let me know if you have any questions down below in the comments, and as always, I'll see you on the next video.